Hi friends, Simit here from InformedTrades.com. I recently got a subscription to the Morgan Report run by David Morgan. It's a report on the silver market and silver stocks. I just wanted to provide a little review, share my experiences with that report here. First, the price. There's a whole bunch of packages, some are more advanced than others, but it starts at 6 months for $78, all up to, and then the next common package, is $130 for the whole year. Then there is more advanced packages that offer more features, and it goes all the way up to $1,000 for the year. Now, the base package, which is what I got and what I'm discussing here, basically you get a monthly newsletter, the Morgan Report. It talks about silver. It's really focused on silver, and as well as silver stocks. The short review is I'm somewhat mixed about it. I think if you are focused on, here's the thing, I think if you are focused on silver, if you really are a believer in silver and you want to focus heavily on that, the Morgan Report might have some value. This would include stocks. I think the coverage provided to silver stocks, the stock picks, is really at the heart of the offering. But if you're not super gung-ho about silver, you may be able to get this information elsewhere. So that's my short summary. If you are really interested in silver, maybe worth checking out. If you are not super passionate about silver like myself, there may be other reports. It still has some value, but there may be other reports that are worth considering as well. So let's take a look at some of the features inside the Morgan Report.
Okay, here is a sample stock report from that's included in the Morgan Report. This type of report is provided for all stocks that Morgan is doing coverage on. And the basic idea here, the reports are pretty extensive. They go over management, they go over company news, company strategy. That's all great. There's also a valuation analysis. So basically what the valuation analysis is about is understanding the company's cost of mining, understanding how much it's mining, how much it expects to mine, come into production, how much it's going to profit per ounce, multiply that by how many ounces it's expecting. And of course, if they have a forecasting, 100,000 this year, 500,000 next year, 1 million the following year, or so on. And then sort of discount future cash flows to get a net present valuation, and then compare that to its share price. So this type of a sensitivity analysis is useful for value investors to sort of get a target idea whether you think a stock is underpriced, and what would be a good price to sell it at. So in this particular instance, there's an idea that, all right, let's say we want to discount future cash flows by 10%, and the price of gold is $2,000 an ounce. This particular stock, we could say, should have a share price of $113.90. So that's sort of an idea. You can experiment with what's a discount rate you want to use, as well as, of course, what the price of the metal is. So this type of analysis is useful. Also, the company news updates and staying on top of these, what's going on with these companies. To me, that's the most valuable part. As I mentioned, the stock coverage is the most valuable part. There's a lot of information on these stocks. If you're an investor in these, in the mining sector, really in any stocks, it's really important to stay on top of this, to understand how the companies are growing and following them. And these newsletters, the big value is that they sort of do that work for you. That's why I subscribe to a number of reports like this. I don't subscribe to Silver Investor, or I have the subscription, but there are some other reports that are more suited for me personally. But for those who are very focused on silver, this is, from that perspective, this may be of interest. Okay, one thing that's also really important for services like this, as I mentioned, or as we sort of saw earlier, the stock picks we're not dealing with intraday picks here. This is not intraday trading. There's a broader, longer-term perspective that the Morgan Report takes in a lot of similar newsletters. In these types of scenarios, it's sort of important. One of the key things that I like to look at personally is the ability of the people authoring the report to identify key timing points when they do occur. So, even though they're taking a long-term perspective, timing still does play a factor. So I like to evaluate, in all, whether you're active trading or long-term trading, there's still that issue of timing. So I was looking through past letters of the Morgan Report to see how it was with timing. One thing that they absolutely got right was, and here you see this is from the May 2011 Morgan Report newsletter. On April 26th, they sent out an alert to their basic members that Morgan had exited his speculative positions, and that was very near the top of the market, so that was definitely a pretty accurate call. A lot of those, Morgan had been in silver from around $3, so hold it for a long time, and then he called the near-term top correctly there. So that's definitely something he absolutely got right and was an important, correct call. However, in the September 2012 Morgan report, we see some incorrect forecasts. In the September 2012 report, David Morgan calls for a bottom in silver at 28, says he goes long there, and says that mining equities have bottomed. In 2013, silver fell below 20, and mining equities still fell below noticeably from where they were in 2012. So this analysis was incorrect. Of course, no one is correct all the time. I just want to illustrate, sort of give an idea of how the Morgan report has fared in identifying the big turning points in the market. That's about it. Be sure to check the description area if you're watching this video on YouTube, or our discussion thread on InformedTrades for more comments and more insight. Share some thoughts there, as well as thoughts from other members on InformedTrades. Any questions, anything you want to add, join us at InformedTrades.com. Thanks and best of luck in your trading.